Thank you, Chair. Thank you, President Lagarde. I would like to start by saying that it's a bit of a shame that the Portuguese centre-right, the PSD, is trying to put national issues on the agenda of a monetary dialogue. I don't think there's any question of your independence. I don't think the EU should be involved in national electoral campaigning. And I don't think any national parties should be casting doubt upon an institution like the ECB for simple electoral reasons. I think it's a shame that the PSD is doing that, and I think that we need to go beyond that. I think we've gone beyond the limits of decency in defence of national interest. Anyway, President Lagarde, let's get down to the really interesting issues. Now, Mr. Moedas called for more regulation in the sector, and people are worried about mortgage interest rates. Now, inflation is going down, that's correct. But how can we explain to people who are suffering from the increase in interest rates at the same time as banks are making record profits and distributing record dividends? What tools can you use? How can you ensure that the remuneration of the deposit facility is not contributing to a profit frenzy in the banking sector? Particularly as many of them are in a deficit situation, and there are issues with non-performing loans. We need banks to reinforce their balance sheets rather than to continue to distribute unlimited amounts of dividends. Thank you.
Thank you very much, Mr. Marquez. And I think what you're referring to is the impact that interest rate hikes have been having on the financing conditions of households in particular, and those that have taken out mortgages. And let me first observe that we have quite a lot of heterogeneity in Europe and in the euro area. There are quite a few countries where households have borrowed under mortgage at fixed rate. And for those, obviously, for the borrowers at fixed rate, the current situation is not totally uncomfortable, quite to the contrary. But there are also countries, and I think Portugal is one, but Finland is another one, the Baltic countries as well, where there is a predominance of variable interest rates, mortgages, and for those, of course, the burden of their debt service has increased as the interest rate has been hiked over the last year. So that is clearly the case. And in a way, we as central bank, we are observing that, monitoring that, and we draw the conclusion that there is good transmission of our monetary policy. Because as we increase the DFR, for instance, or other interest rates, but this one is the most relevant one, we are keen to see that it is transmitted throughout the system in the financing terms that are offered to corporates and to households. We also observe that in the last few months, for term deposits certainly, and a bit more now for deposits, we are seeing a slight increase of the interest rate that is served. Certainly in different proportions, much higher for the term deposit and still very low for the on-site deposit. And we very much hope that our monetary policy is transmitted not just in the mortgages rates, but also in the deposit remuneration. So that's what I can tell you at this point in time in terms of the burden that applies to mortgage holders. And I know that there are countries where terms and conditions of those loans provide for specific suspension for a period of time, particularly if households go through a difficult economic situation. And I know that many banks have actually offered to extend those terms and conditions while interest rates are still high and continue to be high. Thank you.
Thank you very much.